also just remove the case if it's disturbing you.
Yeah.
Yes.
Acha tuweke tu hivi in case naanza kuwashana hapa.
Actually, it's the other way around. Yes. Like that.
We can venture out to explore possibilities. And worlds beyond our years. Refusing to believe the undoable, but always embracing the unthinkable. Inspired thinkers always glued to the possibilities of great futures, embracing challenges with admired hope. A group of good people ready to give you a push as they create, build, and support platforms that steady our feet. Stronger bonds emerge every time we meet, driving the pace at which we connect and make things happen. Because we believe in new creations that are embraced by all, and changes that make life much easier to handle. This wonderful change is meant to connect our futures, because we understand in life the things that you desire the most are within reach when we unlock possibilities for you to do great things every day. UAP Old Mutual is now Old Mutual. Call us today on 0711 065 100.
Good
morning, everyone. Welcome to Old Mutual channel. My name is Eric Karemi. I'm the Chief Investment Officer at Old Mutual Investment Group. We offer unit trusts, private wealth, corporate and pension, fund management services. We are here today to discuss about the economy and just to look at the way forward. So just to start us off, Steve, maybe you can give us a bit of some background on the economy.
Thank you. My name is Stephen Maleche. I'm head of research at Old Mutual Investment Group. The economy has been doing well. We've been recovering from COVID. Remember when everything was shut down, you couldn't go anywhere. Now we are past that. And we've seen more and more of that positive growth. We are still growing. The big challenge in the current year has been the rise in the cost of goods and services, especially food. So that's what we've seen, the inflation rate. And that's been the same all over the world, not only here in Kenya, across the world. Even if you look at the developed countries, the inflation has gone way higher than they expected. So when you look at the current year, what do we expect to see? We think that the inflation, the rate of that price rise will be much less in the current year, although the challenge will be cost of living remains high. Because remember, if you had an item you're buying at 100 and now it's 150, even if the price stops rising and doesn't go to 200, just goes to 155, that impact of the extra 50 you're paying still hurts you because your incomes have not risen at the same level. Yeah.
Okay. So a bit of a tough period in terms of cost of living.
Yes, yes,
for the
definitely.
average individual.
Yes.
But we are seeing a bit of a recovery coming out of the COVID dip that we did have.
Yes, still positive. Economy is still growing.
Okay.
The issue is just around the cost of living.
Okay. Good. And that sets a good stage for fixed income perform well. David, what are you seeing?
Indeed. So good morning, everyone. I'm David Chalo, head of fixed income asset class and a portfolio manager. So actually, just to pick it up from where Steve has left off, inflation is high, but what we are seeing is because of inflation being high, someone who invests their money in something like bonds, they're actually looking for ways to make more money to keep up with inflation. So as an example, if someone invested in a 364-day treasury bill 1 year ago, it would have earned them 9.6%. Fast forward, investing now would earn them around 10.6%. So interest rates have been going up, just like inflation. But in as much as the last couple of months we've seen a bit of a slowdown in inflation, the price of food and fuel is still quite high. And so we expect inflation to still remain high, and thereby also interest rates to remain high. What that means is if you invest in something like a bond, you're getting higher income because of the rates being high. The other thing to factor in is the government agency that is in charge of borrowing, of tax collection, which is KRA, has not collected enough money. So that puts the government in a bit of a squeeze because now the government has to borrow a bit more to be able to plug that shortfall from KRA. And of course, that means that investors will demand a higher rate from the government because they know government needs this money from them. So for us, it's an opportunity. You're able to invest in bonds to get a higher rate. But apart from that, another good opportunity, and I think this is very key for everyone, is that there's space to invest in short-term things that earn you interest. And we're talking of bank deposits, treasury bills, I've mentioned like the one earning 10.6%, and also something like a money market fund. The two main advantages you are seeing from these short-term investments is one, the attractive interest rate, and two, they are not as risky as the long-term bonds that we've talked about. Yes.
So high interest rates, as you have mentioned, they do give a lot of competition to other asset classes.
Oh, yes.
And they give equities a run for their money. So Steve, is there any such opportunities we're seeing?
Yes, equities are cheap now. I mean, if you look at where we are today, the prices we have today, they are cheaper than they have been in the last 3 years. So if you want to buy equities, now's the time to buy. The challenge is that to make back a lot of your money, you need to look out at least 2-3 years out. And why have the markets come down over the last 1 year? Two things. One, foreigners were exiting our market. And foreigners are like 50% of whatever is bought and sold on a daily basis, at least, on average in the market. And why are they exiting? Because one, currency weakness. Two, there are also other opportunities in their markets. Given that their interest rates had risen significantly, they were attracted to those interest rates in fixed income. And then the other minor reason is that local investors have not been coming in because they've been chasing the short-term opportunities. I mean, if you look at right now, what are you getting in 1 year treasury bills? You're getting about 10.6. Yeah. You can get bank deposits of 10%, fixed deposits. If you come to the market, your dividend yield, what you'd get for every shilling you put in, you'd get back probably 7-8% at the high dividend yields. Mm-hmm. So people opt to take the fixed income. So that's what's kept the market down. But pricing, it's cheaper than it's been. Mm-hmm. For somebody who wants to get into equities, now's the time.
So if you have time to wait, then very good opportunities, good companies.
Yes.
Good dividend yields. Yes. You just have to be willing to wait about 3 to 5 years.
I'd say more 2 to 3.
2 to 3?
2 to 3.
Okay.
And don't be worried if it gets a bit cheaper. You need to have the staying power.
So then at least there's quite a few opportunities, both for retail and corporate.
Yes.
What about offshore? I know there's a lot of things happening around the world and also in the property space. So John, can you give us a bit of some color on that?
Yeah. So thanks, Eric. My name is John Kihara, head of the offshore asset class, and also a portfolio manager. So in terms of the offshore market, and maybe just for the benefit of our audience, of course, offshore markets is basically any investment that's outside of the East African region. Typically, this would be an investment in other currency, especially hard currency, and it could differ from region to region. So it's a really vast market that we look at. I think the key thing that we have seen within the offshore market is that the last 3 years have been fairly turbulent. Of course, the COVID pandemic did affect a lot of global markets, just like Steve has talked about the local market. But again, what you're seeing is that, of course, there was the Ukraine-Russia war, which started early last year, which also had an effect, especially in terms of the global shocks from the commodity price that elevated inflation across the world. You can imagine some of the developed markets that it made inflation to reach 40-year highs, just like what you have had, the kind of shock that you have had locally. But then we are seeing some positive growth come through. So for investors who have a long-term view towards market, they're looking to diversify. We think it's a good opportunity to obviously start to look at those kind of markets. And two very important things that are happening is that one, of course, China, which has for the last 3 years have actually been locked, has now reopened, which is good for global economy. Remember, China is the global factory. So reopening of China does help in terms of the global growth. And secondly, if you look at the inflation or the cost of living across most of the markets, it's now starting to come off, which is now encouraging most of the governments to start thinking about slowing down the interest rates. So from an opportunity set, we see opportunities especially, again, for long-term investors in some of the key developed markets. If you think about, for example, the US, if you think about some of the key emerging markets like China, like India. So for investors who are looking to diversify, it makes a lot of sense to obviously start looking and allocating in those kind of markets. And of course, they can be able to do that through funds, or where it's possible, they can be able to do direct. So it's fairly a large universe of what they can be able to access. Yeah. To the other point about property, property. It's what you can feel, can almost hug, touch,
walk on.
Exactly. Yeah. So property market has had interesting dynamics. Yeah. I think if you were to look at the core subsector, of course, mixed bag. Looking at, for example, the office sector, that has been fairly challenged. But now, of course, with a lot of businesses people getting back to work from offices, that has helped just in terms of occupancies, especially for the buildings that are newer and, of course, have good facilities. If you look at, for example, the retail or the shopping malls, we see quite an improvement in terms of footfall. And, of course, if you have to look at some of them that had some of the retailers that were challenged, we are seeing new or some of the expanding local retailers being able to take up space, which of course is a good thing. Of course, looking at the residential market, this is the houses and so forth. A bit of slowdown in some of the sectors, but I think the key opportunity we see here is, of course, the affordable housing. Everyone needs a roof over their head. So affordable housing, it's something that we think is quite a lot of opportunities. There's a huge housing deficit, and therefore investors who are looking at that to tap into that are likely to get good returns. But I think overall, it's really been a buyer's market, which brings in the question around, are we in a property bubble? We think that it's a normal slowdown, just like we have seen with other key investment markets, and we think that there are some positive dynamics are likely to still make the property market still remain quite attractive. So quite an interesting view on offshore and property.
So you're telling us not to go and sell our buildings and land?
No, you shouldn't. I mean, at the end of the day, remember property, if you have good property, you get good rentals.
Yeah.
There is obviously an expectation that is a good capital appreciation over the long term. And of course, it provides the stability that we all need in our investment portfolios. Yeah.
It's your original investment.
Yeah.
So, which sets the stage for a new kid on the block, which is an old kid. Alternative. There's a lot going on there. So, Kevin, can you just give us a brief and tell us what to expect?
Thanks, Eric. My name is Kevin Nyaga. I'm the head of alternative investments at Old Mutual Investment Group. So, indeed, we are the new kid on the block, but like you said, also could be the old kid if we go back in time.
Yeah.
But allow me to demystify what alternative investments are. So we have talked about stocks, bonds, cash and near cash, which we often describe as money market instruments. So these are what we call traditional investments. Anything that's outside the traditional investment space falls into the bucket of alternative investments. And alternative investments is as diverse as imagine. So we're talking of private equity. Private equity, you are essentially investing in companies that are yet to list, unlisted companies. Basically, you have a vision on the entrepreneurship capability of that company. Venture capital, we're looking at companies that have a little bit less history than private equity companies. So also, investing on the promise and capability of the entrepreneur going into or growing the company to the next level. We are looking at alternative investments like commodities which have protection, gold, and oil. I think energy sectors has performed very well in comparison to all other asset classes last year. And assets like art and antiquities. So have essentially provided some defensive play performance-wise. And of course, property, which has been mentioned by my colleague. Now, some of these alternative investments, the challenge is the ticket or the size of investment could be a bit restrictive. So we encourage investors to access such type of investments through a fund structure. And the benefits of accessing through a fund structure is you get access to professional management that you wouldn't have access to in other type of structures. You also are exposed to better diversification because the funds are investing in different subsectors of the economy and also different geographies within the African continent or worldwide. But also through a fund, it's fairly more liquid in comparison. Not as liquid as traditional investments which are traded on the exchange, but you may be in a better position to make an entry or exit into this kind of investments. And also economies of scale, because now you're investing in a larger pool of funds. So that's a huge benefit. In terms of what we are seeing, current opportunities, Currently, we are looking at private equity investments, essentially in an infrastructural themed fund. And this fund essentially is taking advantage of mega trends that we're seeing, not just in Africa, but globally, where there's increased digitization. I think this has been accelerated by the pandemic, and also energy. Once now you have that increased demand, then you need more energy, but focused on clean energy. And as you may be aware, there's a huge gap, especially in Africa. If you look at the electrification levels as a proxy, we are lagging behind the globe. And of course, the demographic dividend that we experience in Africa, where a lot of the populace is a younger population, then there'll be a trend of increased urbanization. So that informs the opportunity of investing in infrastructure to actually stimulate and support growth going forward, especially in Africa. Yeah, but yeah, we are happy to engage on these opportunities with investors out there. Yeah, back to you, Eric.
So that's really exciting. The first time I think I might have had infrastructure and art in the same sentence. But all in all, I think a lot of opportunities going on there. The market is opening up. There's liquidity, and we expect there to be a bit more offering from that side going forward. So just to sum it all up, I think on the economy side, we are saying that we still expect cost of living to remain unsustainably high, due to factors such as food prices, depending on the rain, and fuel prices. On the fixed income side, we are seeing a lot of good opportunities for long-term investments in bonds, especially that can give you good cash flows. On the stocks, we are seeing a lot of opportunities for 2 to 3 years in companies that can give you very good dividend yields. Offshore is still a bit up in the air, but given that it's a very vast market, we see a lot of opportunities in certain pockets, especially developed markets, maybe certain sectors. But given all the geopolitics going on around, it's good to be cautious. On the property side, I think we're still saying it's okay. There's some prices that are coming off, especially in areas that have been heating up in the last 5 to 10 years. But certain sectors, such as hospitality, are now starting to pick up. And if you have long-term money, then it's a good way to diversify your fund. I think on alternatives, a lot has been said. We are seeing a lot of opportunities building up in that sector, infrastructure, especially on the Pan-African side. And it's starting to look a bit more liquid than it used to. Yeah. So with that, I think we've finished our conversation. Thank you, everyone, for joining us. And we hope to see you again at a different time.
We all want to preserve great moments in life. And this is made easier when trusted hands lead the way, opening doors so we can venture out to explore possibilities. And worlds beyond our years. Refusing to believe the undoable, but always embracing the unthinkable. Inspired thinkers always glued to the possibilities of great futures, embracing challenges with admired hope. A group of good people ready to give you a push as they create, build, and support platforms that steady our feet. Stronger bonds emerge every time we meet, driving the pace at which we connect and make things happen. Because we believe in new creations that are embraced by all, and changes that make life much easier to handle. This wonderful change is meant to connect our futures, because we understand in life the things that you desire the most are within reach when we unlock possibilities for you to do great things every day. UAP Old Mutual is now Old Mutual. Call us today on 0711 065 100.